Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, October 1st, 2013. Well, a change of trend for this market today. A candle that's made a lower high and a lower low. The candle we're analysing is the second last candle on this chart that has finished developing, and that final candle is still currently in development. But looking at this second last candle, a very decisive effort from the sellers for today's trading. If you recall, for the previous day's trading, we had the market bouncing up and then through and then back into the cloud, trying to attempt a bullish breakout and then not being able to follow through with the market closing within the cloud. And we saw that for about 4 or 5 consecutive days and suggested that there was a possibility that the trend to the upside wasn't healthy, with this mixture of black and white bodies and the failure to have a decisive breakout and follow through. For the previous day's trading, we saw the sellers take control of the market, and we were looking for a potential lower high and lower low, and today we certainly have seen that. The sellers are very keen in this market, and that's measured by the distance of the close from the previous close. And the sellers have certainly taken control of this market in a very decisive manner, and that decisive that they've taken out two important levels of support, and the first was the 1309 level. That's been a very important level in the recent past, and then the round number 1300 level of support was taken out in a very bearish manner, and does suggest that the sellers have really found some solid downside momentum and do have potential to trade down to around the 1266 level. The only worrying factor here is, have the sellers done too much too quick? And looking at the size of the body in relative terms, it wouldn't surprise to see some buying come in, or at least the sellers to have a bit of a break, and it wouldn't surprise to see the market retrace back towards the bottom of the cloud, and that's exactly what we're seeing in this candle as it's developing. So we're seeing an indecisive candle develop and resistance around the top of the bottom of the cloud. Sorry, I keep saying top, bottom of the cloud. So potential resistance, and we're seeing that occur already. But also, if the market can break out into the cloud, then 1300 may actually hold as an area of resistance for this market. A likely scenario here is to see the market attempt to rally, fail, and then the sellers to come back into this market and test down to around the 1266 level. Now, in terms of the Fibonacci Extension, we're examining the relationship of the new first time frame downtrend to the previous time the market is trending down, and here we've seen the market test to the 100% level all in one go. So it's taken out all of those important levels at 38.2, 50 and 61.8, and testing to the 100%. We have had some rejection from the 100% level, but this is such a bearish candle that it really isn't terribly significant. More importantly is how this current candle is developing is reacting to the 100% level. And we are seeing price rejection from there, but we have to bear in mind that that candle hasn't finished developing yet. So we could end up seeing the market still trade lower as we get some more robust trading for tomorrow. If the market does trade in a bearish manner down through the 100% level, then the 161.8% level may come into play as potentially strong support. That is a fair way away from where the market's trading, but that's down around the 1240 level. In terms of the Fibonacci retracement and looking at this bearish candle, taking out all of the important levels, also taken out the 100% level in a very decisive manner, and suggesting that our next target is the 161.8% level, and that's where the market is trading to at the moment. And this is incomplete trading that we're looking at, but testing to the 161.8% level, being rejected from there. There is a very good possibility of this being price rejection and setting the market up for a potential change of trend back to the upside. So we have to wait until that candle actually develops. 261.8% level is a long way away from where the market's trading down around 1227. Now, interestingly, in terms of the previous head and shoulders pattern that we saw form, we have seen the target met, and it's interesting that the target has been met, even though we had all of this very solid potential support at the cloud. And as we moved further into trading after the breakout, the area of cloud actually became thicker and potentially had stronger support, but I think this really says something about the lack of strength from the buyers, as evidenced by this rally with a mixture of black and white candles, and then the strength of the sellers when they eventually came back into the market. And this may suggest that there is potential for the market to trade substantially lower. Let's wait for confirmation of that. But really here, this highlights how important it's been to be patient for the target to be met. And we also had a second go at this trade with the market trading back to the neckline after the breakout and the close down below the neckline. The indecisive doji type candle and the confirmation of the reversal signal there gave us another go at this market, or to enter the short trade, and then successful completion of it with the target met. In terms of Ichimoku, technically we have had this bearish close down just down below the cloud, and it does suggest that there has been a change of sentiment in that long-term time frame back towards the sellers, and it is a bearish signal in terms of Ichimoku, and therefore quite a strong signal here for the sellers. And if we are trading in a shorter time frame, suggesting that we should be looking for short trades now. In terms of the Kijun-sen, we have the market trading down below the Kijun-sen, so we have a bearish market in the medium-term time frame, and the market is also now trading down below the Tenkan-sen, and suggesting that there is solid bearishness in that short-term time frame. The Chico span here is below the corresponding price action. It has been for probably the past week and a half, and that's suggesting that we have found downside momentum in this market, and this highlights how important the Chico span can be to trading and for confirmation, and is confirming that there is a very good possibility of this market now trading to lower levels. But moving forward, a likely scenario is that we may see the market rally and attempt to test to higher levels, as we have seen with this candle that is developing. Still a possibility of the market rallying to around the 1300 level and then selling off. If the current candle finishes in an indecisive way where the sellers lose control, potential for a change of trend, but the market will interact with the bottom of the cloud, and then we do need to watch how the market reacts around there. But certainly I am considering that there is a possibility of the market then falling back down towards lower levels and testing down to around the 1266 area.